I'm the Data Lord. This is Crypto and Coffee. We talk about crypto and drink coffee. So we do. We have a wonderful Monday ahead of us today. And I know I'm still glitching in the matrix. I have a solution for it, but my weekend did not give me time. So let's look at the markets. I think, what's up, everybody? Good morning. I want to take a look at the markets together. Yeah, little market situation. So, as far as the markets go, today, Bitcoin has a little retracement from 24. We're creeping back down into the 22s. That's good. Um, we'll look at that in detail, but everything else kind of follows Bitcoin. That's because Bitcoin is your daddy. Bitcoin is the big daddy. You got to know that. It's true. And so, what is up today? Let's see. It's probably crap coins. It's nobody. You look at this. Fetch AI, the graph render. Yeah, these are just shitcoin pumps. That's all that is. Nothing special. So that's good. Nothing exciting there. Keeping everyone on track to what this long looks like. I think we had mentioned before we have, this 1, 2, 3 that we're kind of banging up against. We were trying. It was trying so hard. Look at this. It was trying so hard. Even this little wick here, it was trying so hard. It couldn't do it. It couldn't do it. And so I don't think. Oh man, I'm still sick, so I might do this like coughing laugh thing here and there. And you're like, Data Lord, get better, dude. But yeah, this whole like top situation we're running into. I think we got rejected, man. We might keep trying to bang up against it a few more times. That's what happened right here, right? But we'll see. We're definitely excuse me, on the MACD on the bottom. You can definitely see we're dripping into the red. So I am guessing we just got rejected trying to do this, and Bitcoin's gonna bonk against this 21. And if it bounces off it, we're going to try this guy at 23, almost 24 again. Otherwise, death cross isn't, coming in. So at very least, I'm shocked if we don't hit this band right here, the 16K band in that time frame. So, what is up, Boston? Good morning. Thanks for the well wishes, brother. So, looking at like our real long term, because I always want us to zoom out. Like we can get played, homie. We can get played if we don't back up and look at the big picture on a regular, right? It's way too easy to get caught up in the hype of just what's happening that day. And, looking at those short-term gains, but the long-term gains is what everybody should be focused on because long-term Bitcoin performs, right? So long-term gains, we are right here. This is the S curve, right? Bitcoin has followed this. So we touched 64. I coughed. And then we got rejected down to this little pocket here. Right now we are literally bouncing right off that 15. We are touching the line as expected according to plan. This is like a pretty well-known macro view, right? So what's happening from here? Well, we got to test to see exactly where the bottom is. We're going to scrape on it. And once we've scraped on that bottom, nice, we're going to bounce off that. And more likely than not, we're going to start seeing, 60K, 70K try it again. And then all the way up into possibly 150K, looking like probably 2024, right? Going into the halving, right? So look, DCA is like the move. I'm telling you, DCA is the move. This is not financial advice, but if you're dollar cost averaging, you play the average here, right? You're not worried about Did I get the highest high? Did I get the lowest low? You're like, dude, look, I played the middle like a fiddle, and now I'm sitting fat, right? So that's just my macro encouragement to everybody. Like, look at that big picture. Don't get played, right? So getting into our stories for today. That's yeehaw. Coffee time. So we have Finbold here saying commodity guru says cryptocurrencies may be facing their first real recession. Wow. So I'm not surprised by this, please. This isn't even just like crypto facing a recession, but this is real. Like the last recession was what, 2008? That was like the real one we had last. Like Bitcoin hadn't launched until 2009. So like this is legit. This is the first like macro world, recession that people in the crypto space have had to go through at the same time, right? So this is unprecedented in that like we don't know how crypto will respond during like a proper global recession. I don't think this means people should be afraid, but people should certainly be upskilling. Don't play yourself, dude. Like, make sure you're learning useful skills and you're putting yourself in a position to actually contribute to society where it's demanded. Because if not, you might find yourself just trying to get any old job if a company does budget cuts. So invest in yourself. That's the other place you should be DCAing, right? When you invest in yourself, you end up increasing your Bitcoin DCA too, because you just got more extra cash on the side to flip into stuff. So let's read this. So Anna Nisiko. Wow. So as the cryptocurrency market begins to consolidate its bullish advances since the year's turn, senior commodity strategist at Bloomberg, Mark McGlawn, has shared his analysis in which he suggests that cryptocurrencies could be facing their first real recession. Yeah, that's probably true. Specifically, McGlone, I'm gonna call him McGlone because it's funny, said that the digital assets were going through their first macroeconomic contraction, the last of which gave earlier rise to Bitcoin. That's true. So, history lesson, if for anyone who doesn't know, what's up? What's up, John? Good morning to you, brother. Um, Bitcoin was kind of born out of crisis, right? There was a group of people, I believe, some people believe it's a single individual, but either way, if it was a single individual, he handed it off to, a group of people to continue on. Um, it started Bitcoin because of all the Occupy Wall Street stuff that was happening. So, like, basically, there were these really big banks, and these big banks were kind of playing the government, is what was happening. There's these big automotive companies, for example, who they were not solvent. They're playing funny money games, and so they got their big buddies at the banks to work over the government, and the government bailed these companies out. For anyone who doesn't know, and so when these companies got bailed out, that wasn't voted on by we the people, but we the people paid for it, and so that was there's this phrase like too big to fail, right? Um, that like some companies are too big to fail. Well, uh, maybe, but we didn't vote on it, so it wasn't constitutional to do so. So Bitcoin pops out of that context, right? Bitcoin's like, all right, I'm coughing. Great. Being sick is dope. Coffee's doper though. So, people were like, how can we prevent this from happening again? We're like, some companies too big to fail. We can't have this keep happening. People are getting played. So Bitcoin pops up and like, hey, if every we the people is holding their private keys, then the government can't take we the people's money and spend it on something we the people didn't vote for. And so that's the context Bitcoin fits. And so a lot of people might be like noticing, wow, these Bitcoin guys sure talk about finance and liberty and politics sometimes. Yeah, we do, because Bitcoin was created to make sure that you don't get whipped around by aristocratic classes, right? You don't get played by people who are above the law, or people who are, like Animal Farm says, more equal than you, right? So this is heady stuff. There is a principle to all of this. Dirty Shovel Gang, what's up, my boy Indo? Good morning to you. That's what Dirty Shovel Gang's all about. Like, that whole concept is like, make sure you are holding your own custody. Make sure you're burying, um, your finances in something you personally own and no one else can take from you. And if they want to take it from you, you physically have the keys. They're going to have to come and get you, right? Um, you'll also notice a lot of people who are into crypto, not everybody, but a lot of people, they're really into just other constitutional rights and just making sure that they flex them, because if you don't use them, you lose them. So, making sure we do have freedom of speech, making sure we do have the right to bear arms, making sure I'm coughing and getting great. Um, work it out, baby. Work it out. See, I still show up even when I'm not feeling hot. I still show up. But this cough sucks. I don't even feel bad. It's just like I cough sometimes. It's so dumb. But just to give people some background, like, that's like what's happening in crypto. That's why you see these like concepts pop up a lot. It's because Bitcoin is constitutional money. Bitcoin is the most moral form of money, right? And some people might know Heavily Armed Clown. He's one of my good friends, Colin, and he's real smart. He's really smart. If you haven't followed him on Twitter, send him a follow. Tell him what's up, Data Lord sent me. But Heavily Armed Clown is his @ So this dude's like getting into being like a proper Bitcoin core developer. He's really hardcore. But we had this really amazing conversation at the Atlanta meetup back in 2017. I think so, yeah. And we were talking about how Bitcoin is actually a moral form of money. He and I are both Christians. And this isn't like a Christian specific thing, but we were talking about why, like, philosophically, I actually think Bitcoin is so important. Well, Bitcoin is a moral form of money because people cannot steal from other people if they're holding their private keys properly. People cannot lie to one another and shake on a bad deal. Code is law. You don't have to trust people. And so, like, that's the type of morality I think we ought to be supporting with the technologies we adopt and integrate and make part of our daily work, right? Like, it's a moral form of money because it doesn't have inflation where it's stealing from people slowly over time. It is cryptographically secured. It does what it says it does. So, just food for thought. Like Bitcoin is categorically different than other forms of money, and it is categorically different than the rest of the crypto space. That doesn't mean you shouldn't be invested in parts of the crypto space, but they serve different functions. So just hear that. Also, hear me coughing and say, stop it. So back to the news. So, yeah, Bitcoin and cryptocurrencies are facing their first real recession. Totally true. So specifically, McGlone, whatever, said that the digital assets were going through their first macroeconomic contraction, the last of which earlier gave rise to Bitcoin, which is why similar turning points could be expected this time around, according to the assessment posted on Twitter. Let's check that out. So, the assessment. Yeah. So crypto may be facing the first real recession, which typically means lower asset prices and higher volatility. The last significant U.S. economic contraction, the financial crisis, led to the birth of Bitcoin and the possibility coming. What's up? We'll send this homie some love. We'll retweet that. That's nice. That's nice. That's nice. So what are they trying to say? They're trying to say that in 2002 the index bottomed at 70% below this mean and 40% discount in 2009. We don't expect the crypto markets to be spared, and the risk asset tide continues to recede. So, oh, I see. These are much bigger blocks of time. They're basically showing that, like, over what is this? The Nasdaq. Okay, over Bitcoin. Got it. So the white lines here, that's Nasdaq 100, how that was performing, and then these little yellow lines right here, these are the Bitcoin 200 moving average. So we're kind of following loosely that trend. We're certainly at the low when stocks are at their low. So um, who knows? Maybe Bitcoin rips right out and doesn't play by the same games. I don't know, but we still have a death cross coming up, and I think we're going to hit it. So interesting. Um, yeah. Oh, he gets into it. Silly me. Comparing the historical performance of crypto in the stock market, the commodities expert explained a key question is how much price pain will there be before long-term gains resume, providing a graphic that demonstrates the Nasdaq 100 at parity with its 200 moving average, relatively lofty based on the U.S. history of recessions. Okay, I see you. I see you. So basically, we're loosely following the stock market, and what that means, from my perspective, that's traditional investors. And Peter, when he started this DCTV channel, he was talking all about that, dude. Like Peter was mentioning, like, institutional money is coming. Institutional money is coming. Hey, I don't know if you heard me say it the first time. Institutional money is coming, and here we are. Institutional money has come. So, uh, thanks to Peter for giving us a heads up of just what he's seeing from his side of the fence, being deep in the whole VC world. So, um, yeah. What's up, Randall? Good morning to you, brother. Maybe Bitcoin does well in recession. Hey, the question is, are people trusting Bitcoin during a recession? It comes down to sentiment, right? Like, are individuals trusting it with their value? If you are, and you are encouraging your friends and family to do so, uh, Bitcoin will do well in a recession. But like, we kind of have the say on that with our DCA, and whether we're tapping out and selling it just to pay bills or something during downturn markets. So uh diamond hands, baby. That's the move. Diamond hands. And I'm not shading anybody for trading, but like, whenever you sell, like, you are telling traditional investors that if they give you the right conditions, you'll at least temporarily sell, and they can hike the price on you with before you have time to react. So just keep that in mind. But yeah, in 2022, the index bottomed almost 70% below the mean and about a 40% discount in 2009. We don't expect the crypto markets to be spared if the risk asset tide continues to recede. That's fair. In the unlikely scenario of soft landing, Bloomberg Galaxy Crypto Index appears poised to resume beating most equity indexes. Yeah. Earlier, Bloomberg experts shared, I'll check that out too, his views on the future of crypto, admitting he was not yet bullish on digital assets in the short term, but the flagship decentralized finance coin, DeFi, DeFi coin's cool. We'll talk about that too. Could reach six figures in the next couple of years. So let's talk about this little line here. So he's basically saying that, like, traditional investors, they don't think there's reason to believe that in the short term it's a sure bet we're going up. And I've already mentioned to you, like, we have a death cross we're probably going to hit. We're not yet in 2024. Just now in 2023. So I think we're going to see the bottom tap, and we're going to see us flip to the upside. But as far as all-time highs go, it's probably going to happen right around the halving we have in 2024. Typically, that's what happens. Like we hit halving. There's usually a little rally just before the halving. People are trying to, scoop that coin before supply gets kind of cut up. There's usually a retracement right around where the actual halving happens, and then after that, we see lift off, right? So, um, why does he think DeFi coin is gonna throw down? Well, DeFi coin does lending. That's what they do. They do like you can stake kind of it's like liquidity pools, but it feels like staking. You basically say, I can't spend my money. You lock it in and you get paid returns on that. And so people can basically borrow against you doing that, where they can have more leverage in their like trading or whatever. And whether they win or lose, you get paid. So coughing, yeah. We're good. We're online. So DeFi, we're gonna see more and more of it. And what's up? What's up? Birdtown Music Group. What's up? What's up? Good morning. So yeah, we're just talking about how DeFi is probably going to become a more, prominent thing, and I think it should be. Like, it's a good use. It's a good use of blockchain, really. And why is it a good use of blockchain? Well, you don't got to trust people. You can do lending without banks in the middle. Um, in my opinion, banks are kind of shaking in their boots at the concept because check this. So, why do you need a bank? Well, the first purpose you need a bank for is uh, putting your money in so that you don't have to carry it around everywhere. Um, it's portable. Well, Bitcoin solves that. So does other cryptos, right? Where your money is portable. We have these computers in our pocket, these phones. They can tap into satellites all over the place. That's crazy. Damn it, this cough is so annoying. Please forgive me. I showed up. I promise. I'm trying to do you right. But we have these incredible smartphones in our pockets now. So we literally have the ability to be portable with our digital money. And so banks don't have that like value prop anymore, right? Okay, what's the other thing banks do? Well, you typically like, I need to buy a car, so I'll go to the bank, I'll get some auto loan pre-approved. I want to buy a house, I'm going to get like my mortgage pre-approved, And so people will do lending through the banks. Well, the banks are happy to charge you all kinds of interest, and because there's fractional reserve lending, which just explain that if you don't know what it is. Basically, you put your money in the bank. Well, that money isn't like your money. They just literally update their database to say, yes, John McAfee has this much money. And if he asks for it, you can give him at least this much. And like that's it. It's literally just like it's like an Excel sheet basically. It's literally just a database that says account balance, transaction history on the account, right? So there's nothing stopping the bank from going boop 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 and just changing numbers, right? It's literally a loose system. And so when you put $100,000 into the bank, they don't keep that. They lend it out, dude. Like they lend that money out. And if you're like, I need $100,000, they might have it. Maybe they have that on cash on hand. Maybe they don't. A lot of banks don't carry that much cash anymore, right? So you might not actually be able to get your value when requested. And so that's the concern, man. Like money can be weaponized against you, right? And so why am I saying this? Well, DeFi literally takes that second product out of the banks, man. Like they don't have the ability to handle it anymore. Now, I don't think that banks are going to disappear because we still have, some older generations that are very, very stuck on the idea that this is how we've always done it. This is how we always will do it. But at some point, you know, uh, Gen X, millennials, Gen Z, Gen A coming up, like we're going to be adopting these cryptocurrency platforms and using them regularly, and it'll be normalized. And if they offer a better experience, yeah, people are going to use it as opposed to the banks. So like, I think banks really got to figure out what their value prop is, and they need to do it well, right? Like if they don't do it well, they're losing their market share, bro. Like so, yeah. Food for thought here. I mean, please let me know in the chat. Like, am I missing anything? Like, is there anything else that a bank does that like services that you would use that crypto doesn't exactly fill or crypto does fill, but isn't going to be adopted as quickly? So let me know in the chat. But we're online. So, all right. Ugh, this guy needs to stop showing up. So, meanwhile, Robert Kiyosaki authored the best-selling personal finance book, Rich Dad Poor Dad. Why am I giving salt? So that book is legit. This dude is a scam artist. So I mentioned this before, but look, this guy needs poop on his name. I'm telling you, he's not right. So Robert Kiyosaki, he sold to like some super sketchy group of people who were using his name, image, and likeness, selling these rich dad poor dad seminars, right, where they'll teach you how to do investing, and it was literally a pyramid scheme where you went to these like in-person these in-person events where they were like, yeah, you can make so much money and we'll show you how. And then me and my because I read the book and I thought it was legit. Me and my one of my friends went to this, and then they were like, uh, debt is good. It's just a tool. You should get to credit card limits as high as you can, and you should throw down on this program. And then you go into that program. We didn't do this, but if you go into that program, they have another program even deeper that costs even more money. And they ask you to raise your credit limits even more. Dude, that is predatory behavior. That is like shame on you. And there were some there were some interviewers who were talking to Kiyosaki about it, and he was being so deceptive. His body language was miserable, and he thought the camera was off, and he flat out said he started like giving this sob story, started crying about how like, yeah, they made me, and I know it's not right, but I don't know what to do. They had me cornered, and just cry me a river, dude. Like you're lying to people and trying to exploit people's good intentions, actually trying to make a living for them and their family, and you're preying off them, dude. Get out of here. So yeah, I don't got patience for people like that. But just heads up, Kiyosaki's Rich Dad Poor Dad is good traditional advice, but the dude's a turd. Don't listen to anything he has to say. Uh, I got hit with overdraft fees when I was 17. Never trusted a bank since. Yeah, dude. Why not stop the transaction if the money isn't there, dude? Real talk. Like I had a really bad experience too. When I was 18, they like gave me a credit card. It didn't even have a high limit. It was like 300, right? And I thought I'd paid the whole thing off, but they had this like interest that popped up that wasn't part of what I paid. And I thought I was free and clear. And my parents, they aren't financially wise, so I didn't know, to keep checking my balance. I thought I was straight. Well, apparently I ended up my credit ended up getting like bonked because that interest just kept rolling and wasn't being paid. And so uh like since then I've repaired all my credit history and whatnot, like because I was like 18, I'm like in my 30s now. So like that just shows you like the predatory behavior. Like they should have like made phone calls, did something to like reach out, but they didn't. They just bonked. So yeah, dude, create something so valuable just to be a poop head. Yeah, dude, real talk. Isn't that mad? Because I know tons of people have read Rich Dad Poor Dad, and it was legit. Like there's super good advice in that book, and then he uses his name, image, and likeness to scam people, and then doesn't even apologize. He gives a sob story and acts like he's the victim. Like, dude, homie, don't play. So, anyways, this guy thinks he's a Bitcoin expert now, by the way, and he's telling everyone to rack up their credit as high as possible because they'll be rich if they do, because it's free money. It's not free money. I'm not saying credit's not a tool, but like it comes at a cost. Be careful. So Robert Kiyosaki warned of rough landings as bad news, bankruptcy, unemployment, and homelessness were soaring, but The good news was that there were bargains everywhere, gold, silver, and Bitcoin priceless. So that's good advice. But again, this guy's a turd. So cool story, bro. He's just trying to repair his name. For all investors who are considering taking advantage of low prices during a recession to purchase cryptocurrency, it's worth weighing the risks and benefits as well as carefully planning investment strategies. Yep, that's totally true. So don't put all your eggs in one basket. That's a good principle. And even with like Bitcoin, if you might need liquidity in the short, like you shouldn't have absolutely everything in Bitcoin. Like, I was talking to my dad about my grandma, you know, um, she's, late into her retirement. And we're looking at like how to help her grow her money and portfolio. Right. And, my dad, he's rad. He's, super bullish on Bitcoin, right? He's like, he's pretty much a Bitcoin maxi. And, the rest of my family is like not really into crypto. They just see like the bad news headlines, right? So my dad's trying to add like some of my grandma's position in Bitcoin because like real talk, if you throw like if you have a big Bitcoin position and you have like 4 years or something to wait, like you can really get some serious like financial wealth under your feet. So that's what my dad's looking at. But um, in the short term, though, she does need liquidity, and if Medicare doesn't pay for it, um, your retirement funds and stuff don't pay for it, like yeah, you might want to have some diversification and stuff that's just going to beat inflation for parts of your portfolio. So just keep that in mind, as you're working on building your wealth. But yeah, so that's really useful story there, man. So let's talk about Ripple Nipple because the saga continues, right? So Zai Crypto reports, why pro Ripple lawyer says XRP can't be classified as a security, even if it was sold as one. So U.S. Attorney John Deaton, we've been reading about this guy. He explained in depth why the XRP cryptocurrency cannot be classified as a security, even if the blockchain payment company Ripple sold it as a public or sold it to the public as an investment contract. So XRP remains a digital code, says John Deaton. So the debate over whether XRP should be deemed a security rages, something that is in the crux of the legal battle between Ripple and the U.S. Securities Exchange Commission, the SEC. So, in detailed Twitter thread on Friday, crypto law founder John Deaton asserted that XRP remains a digital code even if Ripple sold it as an investment contract in the past or is still selling it now. So, this is the loophole. And I think everyone should probably pay attention to this loophole. So, um, we've talked about this before where like uh, XRP is the protocol that is the blockchain for what people call Ripple, but those same people who made that cryptocurrency and actually did make it a distributed system. Some people argue a decentralized system, but we'll get into that. Um, so those same people started this company called Ripple, and Ripple uses that technology of XRP to make products for banking institutions and otherwise. So what this is saying is that XRP cannot be considered the same as Ripple, and XRP cannot get blowback from the company Ripple, is what they're saying. So this was pretty clever decoupling. It's really thin nuance, but it's properly decoupled. So back to the show. Yeah. So Deaton noted that just because someone used Bitcoin as a security, it didn't turn it into a security. That's true. Similarly, the library credit case, the judge ruled that library sold LBC as an investment contract when it made direct sales. In the lawyer's view, LBC remains a software code and nothing else. That's nice distinction, dude. The SEC even admitted on record that the sale of LBC tokens in the secondary market did not constitute a security. Wow. So This means LBC itself does not qualify as a security. If it did, the court's ruling would apply to all of its sales. So, are we hearing that? What they're saying is that if you work with some people, launch a blockchain, and then start a company that is built using that blockchain but isn't that blockchain, then it's not a security because you don't own that cryptocurrency, meaning you don't control that crypto network as the company, and so the company is not liable for doing fundraising in that way. So that is a loophole. Like I'm imagining what happened is these guys, like, this was like an episode of Silicon Valley where, like, I don't know if anyone's seen that. The show's ridiculous, but they're like working on this algorithm on this whiteboard, and like they start joking about, this is crass, but I'm gonna say it. They start joking about, like, okay, you'd have to jack off like every guy in that entire, audience in order to get this to work. And he's like, yeah, well, how would we do that? We like, how long would that take? And they go down this ridiculous, like, conversation where they're like, well, if you put tip to tip and you're like, maybe you're going tip to tip, and in one fell stroke you're doing two guys at one time. So it's ridiculous. But I'm kind of imagining that's kind of the scenario. They're all on this whiteboard, and they're just making this like ridiculous, draw up of like, okay, well, how can we make a cryptocurrency that we can use for fundraising, but technically not be a security? And they're like, oh, well, these same people, this group of people can create this coin and then leave it as protocol, leave that alone for the rest of the world to use, and it's a community project, and then start a company. We can call this XRP, and people will think it's the ticker for Ripple, but really it's not. And then we'll start a company called Ripple, and everyone will think they're the same thing, but really they're not. And then we can have people spend their money in XRP because they're going to be used for projects that Ripple's making, and Ripple will have lots of news for the banking institutions, and that will make the price of XRP go up. And Ripple's holding 80% of the XRP of the whole network, so their value will go up. Like, this is literally like a Silicon Valley like episode, dude. Like, dude, yeah, that show is wild, dude. Like, but like, I'm imagining that's what's happening here, because like, you hear me talk about it, like, that's kind of what it sounds like, right? like these dudes are literally like creating some like mastermind plan, and apparently it holds up in court. It holds up in court, which is like, this is wild to me. But hey, if the pattern exists, who's gonna stop you, right? So I'm not by the way, I'm not advocating for any of this. I'm simply saying that, like, upon analysis, I think it exists, right? So yeah, that's wild. That's wild. So, anyways, back to the show. Back to the show. So, Bitcoin was once sold as a security. So, Dean also cited. Excuse me, please excuse me. Promise I'll get better soon, Daddy. Dean also cited the crypto market lodestar. That's a stupid word. Bitcoin as he explored the XRP security issue. He notes that the come on, Lord help me. He notes the digital asset was once packaged, marketed, and offered and sold as an investment contract. Yeah, maybe. By who? The CEO of Bitcoin? Wrong. This is the case for condos, chinchillas, and beavers. What? That's what it says. This is the case for condos, chinchillas, and beavers. What? That's crazy. Even though they can be sold as investment contracts, that doesn't mean they turn into securities. Yeah, that's real. That's real talk. So the SEC took action. Hold up. I'm gonna get myself some cop drops. This is stupid. So the SEC took action against Ripple in December 2020, contending it had sold an unregistered security since 2013. 2 years later, the high-profile case grossly muddied Ripple's reputation drags on. Yeah, whatever, dude. Dre- These guys are over here on the whiteboard doing tip-to-tip math and like, oh goodness. So most XRP loyalists believe Ripple has the upper hand in the case, and they're convinced the company will ultimately prevail. Yo, I want to talk about this for a second. How are these people pro crypto and they're cool with this company owning 80% of the network of this coin they're trying to hold? Like, tell me, how does that work? Like, like, okay, yeah. This whole decentralized thing is super powerful. This company's got 80%. That doesn't matter to me. Really? Um, I'm gonna get nerdy for a second. We gotta talk this over. Please listen. So a distributed system is like Amazon Web Services, right? So like, yeah, there's servers in like, you know, Denver and, you know, Sacramento and Tulsa and New York, like they're all over the place, right? That's what makes it distributed. So distributed pertains to like computer topology, which means like there's computers in different places, right? Decentralization does not refer to topology. Decentralization does require a distributed system, but decentralization refers to the fact that different people own those different nodes. So not one single power owns all of these pieces of the distributed system. Does that make sense? So Bitcoin is both distributed and decentralized. It's both. Ripple is a distributed system, like there's nodes all over the place. But if one group of people owns 80% of the coins, what's to say they don't own more than 51% of the nodes on the network, right? So like you have to elevate your thinking to that level, right? Just because something's distributed does not mean it's bad, and just because something's distributed does not mean it's decentralized. So don't get those two twisted. But uh, so yeah, this whole Ripple thing. I want to get into this weirdo story about Doritos. It's a crispy story, guys. It's crispy. So yeah, Polygon. We talked about them all the time. Polygon's dope, right? Because Polygon gets into basically expanding the ETH network and doing so in a way that scales nice, well documented, all that. So world famous food brand Doritos invites everyone to join its pioneering metaverse experience in Decentraland. The ticker for that is Mana. Doritos Triangle Studios ready to explode into the red hot segment with with NFTs on Polygon Matic, right? Doritos Chips becomes the latest brand to launch in metaverse with Polygon based NFTs. So I just got to tell you, I personally do not want to eat Doritos in the real world, much less in the metaverse. I don't need Doritos in my metaverse, but no shade to a company that's, you know, hopping in there. Yeah, there was a case where beaver pelts were used in a security contract, dude. I know. this this world's wild. We live in a crazy world. So Doritos Chips becomes latest brand to launch in metaverse with Polygon-based NFTs. That's cool, actually. Polygon NFTs are better than ETH NFTs because they're fast. And they're cheaper. According to an official statement shared by the representatives of Doritos, the American chips producer opens its first metaverse venue, Doritos Triangle Studio. Okay, I get that. Campaign kicks off February 8th with the brand-themed mini games, airdrops, and lotteries. Okay. So they're just trying to get stoners who like Doritos a whole lot to cash in on some crappy chip NFTs. I get you. But even still, this like yeah, I'm gonna have to check this project out. Dude, I mean, you see eclectic interests, right? Like funny people with lots of money are into weird stuff. So you see this on like reality TV shows. There's hoarders that actually have legit collections, but they're still crazy people. So who knows? So interesting. In the coming weeks, the luckiest metaverse enthusiasts will be able to win high-end custom-made gaming PCs. That's cool. Super rare NFT CloneX Takashi Muramaki drop. Meebits 53 digital collectible by legendary studio Larva Labs. Oh, these are legit drops. Okay, cool. That's dope. Also, some fancy merchandise items will be up for grabs. Details of the prize pool will be revealed February 8th. The virtual experience will take place in the Decentraland Mana metaverse. I gotta tell you, this whole Decentraland thing, I don't know how I feel about it. I think there's going to be better metaverses than Decentraland, but it's certainly being built out. So we'll see. I mean, you got big commercial interest in this, right? Yeah. My bet. I think you're right. I mean, it's almost Super Bowl time. I bet that's exactly what they're thinking. We saw like last year. What was it? Coinbase had that really weird one where they said like a QR code on the screen. Um, yeah, I bet you're right. So coughing's dope. All NFTs in this campaign are minted on Polygon. Good choice. Thus, the blockchain cements itself as the go-to technical platform for large-scale metaverse experiences of global brands. That's real talk, though. That should imply Polygon's bullish because real companies are using it. So I've been telling you I did R&D on Polygon and it met all my audits. So Polygon, they're doing something right. They beat ETH with an ugly stick. Ethereum is cool because it proves some things out, but I think I still hold this position. Ethereum is like it's like the test bed. That's where R&D happens, right? I think it'll be valuable because the R&D spills into the rest of crypto, but as far as like where it's better implemented, it'll always be better implemented on the second go around. So I think Polygon's got that for that reason. So interesting to note that they, as well as several other brands, started using Polygon without and biz dev, business development activity or help from Polygon Labs. So they didn't have Polygon handhold them; they just rocked it and it worked. So that's dope. Organic mainstream adoption is the best mainstream adoption. That's true. Totally agree with that statement. And so that's what we got to look at too, as investors in this space. If people are or if people are organically adopting the platform, that's the best type of adoption, as opposed to if companies are like having to handhold people and kind of force them to use it. That's not as sticky as like, yo, it just worked. It was the whole Apple approach of like, it's not complicated. Your grandma could figure it out. So over the past few months, Polygon increased its bet on the status of leading NFT centric blockchain. In Q4, top tier Solana based NFT collections migrated to it. We covered that here on DCTV that like Solana had some people kind of trip. Solana had the whole Solana Foundation questions about whether they were solvent or not, and people were like, "Yo, I'm not betting my future on these punks who aren't being transparent. We're just moving to Polygon. It's faster anyway." So I don't think Solana is going away. It's going to recover, but Polygon certainly won some big hearts and minds. Specifically, um, Polygon's partnered with the first ever Nike digital sneaker studio, Swoosh. That's a big deal. That's a big deal. That's like street cred status, right? In the studio, sneaker fans can collaborate with Nike's designers in creating new footwear collections. So, by the people for the people on the blockchain, that's good stuff, man. So, I think that was probably like the most important news of the day, and I doubt other people are going to cover it properly. So, you've been informed, my friends. And this is pretty interesting. I wanted to share this one with you too. So London emerges as the world's most crypto ready city for business. So we good. Hold up before I get into this. Indo, yeah. What are your thoughts on Decentraland? My thoughts are I just need to like play around with it. I think it looks. I don't like how it looks. Like visually, I don't like how it looks. That can be fixed. I know that's not the whole story, um, but yeah, I pay attention to just what companies are really getting behind crypto and what countries are getting behind it. I don't need to read this whole thing, but London apparently is up and coming, so pay attention to that. That's all we got time for today. We'll certainly be covering some more stuff on Wednesday. Make sure you stay tuned. Hop in our Discord if you want to have more conversations. I'll be around. I am the Day Lord. Thank you for joining me for Crypto and Coffee. Hopefully, I won't be coughing like an idiot later. And just remember, keep your whiteboard strong, right? Keep calm. Huddle on, baby.